Shares of Kroger are slipping today after the grocer saw sales come in below expectations in the second quarter after it said it incurred a $1.4 billion opioid claim settlement. But also big news coming on its quest to acquire Albertsons. Remember, they have been trying to win antitrust approval for their merger of $24.6 billion. What had been reported upon earlier in the week has indeed been confirmed that the company is going to sell 413 stores, or I should say Kroger and Albertsons together collectively are going to sell 413 stores to the privately held C&S Wholesale Grocers, which I believe owns the Piggly Wiggly stores.
Really?
Among others.
I have a Piggly Wiggly tank top. I pull it out for the summers. Got it from Hilton Head Island, South Carolina.
I really need a picture of this.
Done deal.
But in any case,
yes.
So that's what's going on here this morning. So, yes, Kroger did report the numbers, but it's sort of been overshadowed by this divestiture because they have been trying to get this merger done.
So, for the numbers then, I will add that in, layer that in. Identical sales without fuel. That increased by about 1%. Underlying growth of about 2.6% all in. This is also a quarter where they saw digital sales grow by about 12%. Of course, there was many years ago, I believe around 2018, that deal that they made with Ocado to really kind of beef up their ability to have more of these digital connections. So continuing to see digital sales grow at a time where, of course, Walmart, Amazon continuing to invest into that front for themselves on the grocery business. And on even as Walmart has a large lion's share of the grocery market share here in the U.S., once you look at the digital market share for grocery, that's where Amazon and Walmart get a little bit closer here. And for Kroger, trying to continue to maintain the number of households that they service, that's where they actually might have a little bit more of a competitive point or journey as well here.
Yeah, and it's interesting as we get back to the consolidation for just a second here. You know, the U.S. grocery market is still incredibly diverse, right?
Yeah.
You don't have a lot of consolidation. That C&S company, by the way, isn't even the largely held private grocer. There are quite a number in the United States. Wegmans, one of them, is opening downstairs in our building. And then you have the likes of Publix, et cetera, as well in the United States. So this Kroger-Albertsons combination will indeed create a big player in the industry, but there still are a lot of big players. But as we know, the Federal Trade Commission has been, we could say, more reluctant to approve some big deals across a host of industries. You know, it sort of has a rap of being anti-tech, if you will, or reluctant to allow tech deals, and in fact, maybe trying to separate tech companies. But it's not just tech. They are really scrutinizing deals in other industries like grocery as well.
Yeah, and included within the sale, too. I mean, you mentioned the 413 stores. You got 8 distribution centers, 2 offices, 5 private label brands. And here's why I mentioned those private label brands across the 17 states and District of Columbia is because in a trade-down environment, those private label brands become even more valuable for a company to be able to deploy to so many customers who are just looking across price or their unit price that they are actually paying and actually trying to figure out, all right, can we save a few nickels, dimes, dollars, and cents in certain areas of that grocery store or shopping experience as well. And so that private label part of this could be particularly valuable in this deal too.
Yeah, and they have the benefit of being higher margin as well. So that's kind of something that helps out the stores as well. So we'll see if indeed they get approval for this deal. They say they're still planning to close it in early 2024.